Hey guys, Daryl Dyke, CEO, founder of Noble Mortgage and Investments. Thank you for joining me on my weekly Facebook Live, and happy Wednesday to you. I hope everybody's doing safe and wearing their masks and washing their hands. And I'm sure everybody feels the same way. It seems like we were starting to get back to normal, and everybody was feeling comfortable, and things were starting to reopen, and then boom, they jerked the rug out from under our feet, and we're kind of getting back to square one. So. Very disappointing. It was a big letdown for us here at Noble Mortgage. I had brought all my staff back in, and now we've kind of dispersed it again, where we have some of them here, some of them not, kind of rotating days. One thing I did find is that some people work better from home than others. Me personally, I don't work well from home. I need to leave my house. I don't want to make my house my office. So that was an interesting time. And I found the same thing with some of my loan officers. Some of them were very, very effective working from home, and some of them need that more structured environment in the office. So that's been an interesting balancing act from the management side for myself. So interesting times for sure, but hope everybody's doing well. What's going on in the market right now? I will say that June was a really good month for us here at Noble Mortgage. It seems like the dust had settled. People starting to get active again. We're starting to see a lot more deals out there, starting to see really good deals out there, and investors starting to be a little more aggressive. So that was a really positive sign. Interested to see how the June numbers look when the MLS data comes out here, probably sometime in the next week, and I'll cover that next week with you. So everything's still on solid footing as far as the lending atmosphere is concerned. Hard money, again, like we've been offering since COVID-19 started. We're extending our terms from 6 months to 9 months, so it gives you an extra 3 months to do your flip projects and so forth, or if it's a buy and hold, any sort of hard money loan, we're doing, instead of 6 months for the same cost, we're going to do it for 9 months, although buy and holds don't typically go that long. So anyway, an extra 3 months, we're still extending that. Conventional lending, still very, very, very low rates. We're still doing lots of refinances right now. Again, if you have a primary residence, rates are less than 3. If you have an investment property, rates are less than 4. So lock in your rates right now. Take advantage of it. I did that. I'm doing all the same for my friends and family, and obviously past customers. We're calling on all of them to let them know. So take advantage of it while the rates are so low. We never know when they're going to turn. So all that's good. Also on the non-QM, we're starting to see more and more aggressive lenders come out. Some of them have come back into the market as recently in the last couple of weeks. I've also seen a couple that have decided to shut down the last couple of weeks. So, but the non-QM is back. Again, these are loans that are built for investors. Predominantly, they do have some programs for primary residences as far as bank statement programs, but it's predominantly a loan for a real estate investor that just can't qualify under the conventional standard of having to disclose tax returns and so forth. Their most popular loan, like I always talk about, is their debt service coverage loan, where all you need is a certain credit score, 680 to 720. That does affect the LTV, but as high as 75% loan to value on those loans. And once you have a property, they will take the market rent and or your current lease agreement to qualify for the loan. No tax returns required. So very, very good loan. The rate is, not as aggressive as a conventional loan. It's going to be above 6%. So, but it serves its purpose. We've done a lot of those loans over the last couple of years, and we're very, very happy to have those loans back. For those of you that missed our last networking event, we have a couple more coming up. This month, we're having another webinar series, and we're also doing our real estate virtual network, which has been a lot of fun. That's where we get on a Zoom call. We cap it out at about 30, 40 people, and everybody has an opportunity to introduce themselves because we don't have our networking events anymore. I wanted to have some sort of networking events, so we started doing our Zoom calls. It's called our Rev Network. It's been a huge success, having a lot of fun. Again, I give everybody a chance, a minute or two, to introduce themselves, talk about what they do, what they're looking for, if you're offering a service, you got a property you're selling, whatever it is, and then I'll bring a guest on who's going to talk about something in the real estate field. We've had tax people, we've had real estate investors talk about their experience, so it's been really, really, really fun. Our next one is July 14th, and we have Ashley Patton from Patton Title. He's going to talk about how title can prevent nightmares for investors. So if you are a real estate investor, especially if you've ever bought from a wholesaler, I'm sure you've run into title problems, and Ashley is a brilliant guy, very, very smart guy, owner of Patton Title again. So it'd be a pleasure to have him on there. You guys join us, bring your questions, because title there's lots of ins and outs to it, and you need to know how to maneuver that, especially if you're dealing with things like airships and several people own the property. So you got to have a good title company in your corner. So honored to have Ashley Patton with Patton Title. And then also we're having a webinar. The last couple webinars we've asked everybody, what do you want to know? What do you want to talk about this time? And so two things that keep coming up is they want to talk about financing, of course, which I can cover that, and how to find a deal. So I'm going to bring on Michael Horton, who's one of our investors, and he has done several loans with us. He's a great rehabber. He's going to talk about how he goes about finding his properties. He's going to talk about his rehab process. Hopefully we'll have some pictures of his before and afters, but very successful guy. Glad to have him on. Continue to do business with him, so it's great to see his story over the time. So lastly, we're going to go over our tips. Today we're talking about real estate, of course, and why is real estate a great investment. So there's lots of reasons why, but I came up with 5 reasons why I think real estate is an outstanding investment. Number 1 is real estate can be leveraged, okay? Leverage meaning you don't have to pay cash for a property. If a property is $100,000, you can buy it with 0 money down or 10 or 20% down and leverage that over time. So very huge benefit of real estate is that you can leverage it. Real estate provides better and more predictable returns. Okay, when you're buying a piece of real estate, especially I'm talking more on the rental side, you know what you're getting. You know how much money it's going to cost you to buy it. You know how much you're going to be able to lease it for. You know what your mortgage payment is going to be. Okay, some of that might change with taxes and insurance. However, it's very predictable, so you have an idea what it's going to be like. Whereas, opposed to if you put the money in, let's say, a stock or a mutual fund, you really don't have any idea what that stock or mutual fund is going to be valued at, what your return is going to be, anything like that. So very valuable to know what your return is going to be. Number 3, real estate is a tangible asset. Okay, again, comparing everything to the stock market because it's easy to do it that way. But when you buy a piece of real estate, it's never going to not be worth anything. Even if it burns to the ground, you still have the land value. So that's very valuable. So you always have something there. Number 4, real estate always goes up over time. Okay, typically depending on the market and depending on where you're at, real estate doubles in value about once every 10 years. So you know, they say if you're not getting the price you want, just wait, because over time, you know, because of inflation and so forth, the property is going to be worth a lot more money than what you paid for it. So holding on to real estate is always a good thing. And then 5, lastly, my last tip as why real estate is such a great investment is you get so many tax benefits. You get to deduct your mortgage interest, any capital improvements, you get to depreciate. All these things are huge when it comes to preparing your tax return at the end of the year, which, by the way, if you haven't filed your tax return, they are due 2 weeks from today. So they extended it from April 15th to July 15th. So if everybody thought that that was going to go away this year, you're crazy, right? Because all this free money they're giving out has got to come from somewhere. So tax returns are due on July 15th. So anyway, those are my 5 tips today in our market update. Thank you guys so much. I did see we had a question on non-QMs. I will send you a private message on that. And if you have any questions, you can always call us here. Our phone number is 713-680-8100. My personal email is askdarrell, that's ask, D-A-R-E-L, at noblemortgage.com. Those go to my inbox. I respond personally. If something I can do for you, you have a question on financing, or even if I'm not doing the loan for you myself, I'll certainly try to point you in the right direction. And then go to our website and sign up for our next free events. Are coming up this month. We have actually 3 this month. We have 2 of our Rev Networks and 1 webinar. So everybody have a great day. Stay safe, mask up, and have a great holiday weekend.